Welcome to Discovery Watch with John Kaiser.
I'm your host for Discovery Watch, Jim Goddard. John, I understand you were at the Toronto Mines and Money show and you saw some various things there. Of course, you did do a report for This Week in Money about the show, but anything that you didn't mention in that report stand out for this one?
Well, while in Toronto, I visited the office of West Dome Gold Mines to meet the new CEO, Duncan Middlemiss, and get caught up on the spectacular results that they reported in late August for the Kena project. Those results took the stock from the $1.50 level up 75 cents in one day, $100 million market cap gain. And this company, it has a modest sort of 40,000 ounce per day underground open pit gold mining operation in Ontario. It has an optionality play called Moss Lake with 3 million ounces that it needs to boost into a larger resource and probably needs a better gold price too. But the Kena project was the mine that had operated since 2006 after it took it over from the bankrupt McWaters Inc. And they had to shut it down in 2013. It's costing them $2 million a year to keep it on care and maintenance. And this year the company said, okay, we have to decide what to do with this. We can't keep paying $2 million just to keep the everything ready for restart. We hit some interesting high-grade gold at depth in 2010 and 2012. We've never followed it up. We should sell this project, but before we do so, let's drill some holes testing the 1,200 meter level where supposedly the S50 ore had run out. This was stuff that had produced at 4.5 grams average grade over a 15-year mine life, produced 1.7 million ounces, but the grades that they hit were better. And what they reported on August 24th was spectacular intervals up to 89 ounces per ton. That's like $100,000 rock. And they did it with several intervals in 2 holes. And so what everybody is wondering about, this so-so vein system here, is it blossoming at depth? We know these Ontario-style orogenic lode deposits can go down to 3,000-4,000 meters. They can have grade changes. Is this perhaps something like the Red Lake story that unfolded in 2000-2001?
What was the Red Lake experience? Well,
Rob McEwen's company, Goldcorp, had acquired the old Red Lake mine in the Red Lake district. It had produced about 6 million ounces over its lifetime. It was squeaking out 50,000 to 80,000 ounces per year when McEwen took it over. And he felt that there's got to be more gold here. But where is it? And normally in the mining industry, all the information you have, you keep it very secret. You share it with anybody. You sign a confidentiality agreement. You can look at it and then maybe do a deal with the company. But you can't act on this information. In this case, he took 400 megabytes of data and made it publicly available to anybody out there to crunch and come up with a scenario as to where the missing gold ended up. And he did this in March 2000 with a deadline of July 31st. And all kinds of geological groups participated in this. And one of the submissions ended up finding an enormous resource. Within 2 years, Goldcorp was able to go to up to 500,000 ounces a year. And this is 20 gram per ton gold. This is like 2/3 of an ounce. Just fantastic grade. And since then, it's produced 8.6 million ounces, and there's another 6 million ounces in the different categories of 15 to 20 gram per ton left. So this was sort of a spent mine, sort of living off the remains of what had been left behind by the bigger operators, transformed into an absolutely fabulous cash cow. And so now people are wondering, boy, is history going to repeat itself? The Kena project's right next to Val-d'Or, which is a mining town on the Quebec side of the border within the Kirkland, Larder Break, Cadillac Larder Break, Abitibi Greenstone Belt setting. And the stock has probably about a $400 million valuation. There are more holes underway. They're drilling from 2 underground setups. We'll be getting results over the next 3 months, gradually trickling in. And if we start seeing more of these incredible high grades, which when they cut it to 1 ounce per ton, it drops down to about 18, 20 grams per ton, which is still very valuable rock. That's like $800 rock, very suitable for underground mining. And we may have an absolute explosion of interest if this is confirmed, especially given that there's a big trend right now is juniors revisiting old gold mines that supposedly were depleted or ones that were never quite good enough to be put into production, going back in there and revisiting them. This is that group of style of discovery exploration I call revisiting a known system. If this turns into another Red Lake type story, it will not only make West Dome go a lot more than the current level that it's gone to, but it will also ignite enthusiasm for all these high-grade quartz vein systems in Ontario and Quebec.
So what are we looking for with Kena over the next few months?
Well, they drill these holes. They take 2 to 3 weeks each to drill. Then there's another 3 weeks assay turnaround. We're probably due for the next couple of holes in the next week or two. So we will get them in a steady flow. And the geometry is not well understood. They think it's a sigmoidal structure similar to the S50 that has been mined continuing at depth with perhaps parallel versions of it. So again, this will be kind of like a classic exploration play where every result people look at, scrutinize very closely. They try to build their own model. Is this thing pinching out and disappearing? Sort of the joke on the street was, is this a gold porn freak show that's just a flash in the pan, or is this an absolute monster that's evolving? So this is one that one should watch very closely every time there is a press release to see if this new zone is indeed blossoming or just fading away like a flash in the pan.
Did you meet with any other juniors testing for deeper high-grade potential?
Well, I met with Scott McLean of Transition Metals, and he was also exhibiting at the Mines and Money show. Transition Metals is a classic prospect generator. They spend very little money directly on any exploration projects. They do two styles. They either farm the project out directly to another company and retain some sort of minority interest after the other company does the initial discovery exploration work and then feasibility demonstration work, or they put it into a subsidiary that they then raise money from private sources for and eventually take public. The one that has me particularly intrigued is the one they call Sudbury Platinum Corp. And they, at this point, retain a 36% equity stake in it. The company's raised about $7 million in the past couple of years. It is still private, but has big shareholders such as RCF. It's in the midst of a $3 million program that began in mid-August and which will run for the next 12 months. And the focus is the Air Kid project, which occupies a segment of the Worthington Offset Dike, which is juts from the southwestern end of the Sudbury Basin. And the Sudbury Basin is this 20 by 50 kilometer asteroid impact crater that has generated about 1.6 billion tons of ore in the past 100 years, grading over 1% copper, 1% nickel, and 1 gram per ton platinum group metals. It is one of the most fantastic mining districts in the world. And the mineralization found there comes in three styles. And the style that's here of interest is the so-called offset dikes, which are these radial fractures that radiate out from the impact crater and that have been filled with dike material, but also with mineralization. And this project, where they have the Air Kit, it has some old workings on it that was worked in the 50s down to about 300 meter depth. The lenses, the nickel copper lenses, were discontinuous. It was not really a big deal. But 3 kilometers to the northeast, FNX made a fantastic discovery 10 years ago called the Victoria Deep or Deep Victoria deposit. 14 million tons of 2.5% nickel, 2% copper, and almost 8 grams per ton platinum group metals. And a couple kilometers to the southwest, Vale owns the Totten project, also a substantial deep deposit. And what they have now got underway is a 16-hole drilling program, of which 4 holes are very deep platform holes. Each of these holes takes about 6 weeks to drill down to about 1,700 meter depth. Then they put a downhole geophysical probe into the hole, and they look around for electromagnetic conductor signaling a massive sulfide deposit. If they see something like that, then they drill a series of wedge holes targeting this. At the 1,200 meter and deeper level, they're looking for 5 million ton plus massive sulfide deposits, and there's 4 holes targeted for that depth. And then they have another 12 holes for the shallower segment between 300 meters and 1,200 meters, where they will also be looking for similar types of targets. So 8 weeks to find out whether or not you have a target, then 2 weeks to drill each wedge hole. And so this is the kind of thing where you just sit back and patiently wait for the day when suddenly they announce we have intersected a nickel-copper PGM massive sulfide mineralization. Based on the size of the conductor, we can already tell how big this is going to be.
We'll have more on Discovery Watch with John Kaiser right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. John, nickel's not all that popular right now. Why, and what could improve the situation?
Well, nickel has had the problem that when a supply squeeze in 2006 took nickel to $25 a pound, the Chinese, who were the biggest users of nickel to make stainless steel, they figured out a way to put nickel pig iron into steel to create a lower quality stainless steel that was acceptable for their needs, not really acceptable for, export needs, but they were able to take this innovation and it enabled them to purchase low-grade laterite nickel ore from Indonesia and the Philippines that was simply mined and direct shipped, put into the blast furnaces to make nickel pig iron, and then fed into their stainless steel mills. And that's how they dealt with the $25 a pound price squeeze. And this was so successful that the Philippines and Indonesia went from sort of 4th or 5th or 6th place in world production to top spot. And it crashed the nickel price down to sort of, it's been as low as $4 a pound. The warehouse stocks are, were at least in 2015 at record levels, and it's been very miserable for the nickel sector. But what's changing is that several years ago, Indonesia decided that it wanted to have these blast furnaces operating on its shores, not offshore, so it banned the export of raw ore, and so now it has dropped to about 7th or 8th place in nickel production. However, the Philippines has continued to ramp up supply, and they basically replaced what Indonesia took off the market. So we're still dealing with an oversupply of nickel situation. However, with the new president, Rodrigo Duterte, in the Philippines, he has a minister of environment who is quite hostile towards raping and pillaging the landscape in order to extract ore and ship it as raw ore to China. So mines are already being shut down. And there's also going to be an obvious depletion curve, too, as all the low-hanging fruit gets mined. So the expectation is that within the next couple of years, the Filipino supply of this laterite nickel ore to fuel the nickel pig iron market is going to subside, and then the pressure will go off nickel, and these other sulfite deposits will flourish again when nickel goes back into that $6 to $8 per pound level, which is really what you need to get excited about nickel projects.
How about juniors, which are advancing an existing project, but also engaging in grassroots exploration within the same project?
Well, one of the companies that was exhibiting at the Mines and Monies America show was Gold Quest Mining Corp., who happened to have released on that day a pre-feasibility study for its Romero project in the Dominican Republic. Now, this company has spent both with its own money and a former partner's money, $32 million in the Dominican Republic in the Tirio Formation Belt. It's a 50-kilometer stretch since 2005. But they didn't really have any luck until 2012 when the new CEO, Bill Fisher, who had commissioned an IP survey and drilled one of the targets, discovered the Romero North gold-copper deposit. And they've since spent $20 million on this project, and they released a pre-feasibility study for a fairly small-scale, 2,800 ton per day underground mine that would generate over a 7-year mine life 840,000 ounces of gold at a pretty good grade of 3.72 gram per ton gold with copper and silver byproduct credits. So this small-scale operation would cost about $160 million to develop, has an NPV, after-tax NPV, of about $203 million, and an internal rate of return of 28%, all kind of the right numbers. It's now going into that feasibility permitting stage, which everybody calls the value trough because nobody cares. It costs more money. Management figures it will cost another $5 million by the end of next year to move this project along, which would make the story pretty much boring from an investor perspective. But what they are finally doing is tackling a 15-kilometer segment to the south of the main Romero area, where they conducted an IP survey this year, which has lit up 19 distinct IP targets. And IP targets represent sulfide bodies, whether they have commercial metals such as copper and gold in it. You can only test by drilling. It could be just pyrite. But each one of these targets needs to be drilled. Each one of these could be another Romero. They now have a big program underway, which started in September. It will last probably until another 6 to 9 months. 40 holes being drilled. They're on the 5th hole. It's 10,000 meters total. They drill them to about 250 meters. It's only going to cost them about $2 million. They have $8 million working capital. So basically, to the end of 2017, we will see the Romero project move along slowly towards a production decision. But at the same time, we have the potential for multiple repeat discoveries. Some of them could be bigger and better, some smaller and maybe not as good. But if you're exposed to this company now, you have a shot at brand new discoveries. And when Romero discovery was made, the stock went from like 8 cents, and this was in 2012, up to a high of $2. And the market loves these types of discovery plays. So here you get the best of both worlds. You have a existing deposit that's worth developing at the current metal price, and then you have this repeat exploration play that's really grassroots exploration, because this part of the belt in the Dominican Republic has never seen any drilling. So you're drilling virgin territory, and you have no idea what you might come across. And when you do, the glass is half full. The market will assume that it's bigger and better than Romero until proven otherwise.
Area plays used to be a big part of the Canadian junior exploration scene. Are you watching any more such projects?
Well, one of them that got a new shot or reignited this year is the White Gold District in central Yukon, about 100 kilometers south of Dawson City, where the Klondike Gold Rush took place 100 years ago. In 2009, a junior called Underworld Resources optioned a project from Sean Ryan, who's sort of the super prospector in the Yukon, and they discovered the Golden Saddle deposit, about 1 million ounces, 3 grams per ton, and Kinross bought the company in a bid worth about $138 million in mid-2010. And this was great because the stock disappeared at $2.58. It had been a bottom fish buy of mine earlier, a year and a half earlier at 17 cents. So that was wonderful. And when the Underworld discovery first came to light, all the ground in the area ended up being staked or optioned. One of the companies that acquired several prospects from Sean Ryan was Kaminak Gold Corp. And the key one was the Coffee Project. And they fairly quickly discovered a series of oxidized surface zones associated with the Big Creek Fault. And they ended up they completed a feasibility study at the start of this year, which had an NPV of about $455 million and an internal rate of return at 37%. And they used a base case price of $1,150 gold. In the last while, everybody'd been using $1,300 gold, and their projects, well, they weren't very feasible when gold was down there at $1,100, $1,150 or so. This 14,000 ton per day open pit heap leach operation was going to churn out about 184,000 ounces annually from about just under a 2 million ounce resource. And it attracted a takeover bid from Gold Corp that finally closed in July, worth about $500 million, and the stock disappeared at $269. So, whereas the Underworld project, Kinross looked at it closer, did not do anything. That kind of sapped the life out of the white gold area play. Now with Gold Corp taking over the Coffee Project, and definitely with the goal of developing it in mind, there is new interest in it. And the one that caught my attention was Randy Turner's Independence Gold, which was also exhibiting at the Mines and Money in America's show. And that is the Boulevard Project, which is just south of the Coffee Project. Now, it is a different setting from the Coffee Project, which is a series of splays off the Big Creek Fault. There don't seem to be any splays to the south of the Big Creek Fault where the Boulevard Project is. But what we do have is substantial gold and arsenic and antimony anomalies in the soils. This area is covered by a lot of overburden. It's not an area that has been glaciated, so it's just sort of locally drifting, weathered material. Displacement can be 10 to 100 meters away if you're seeing the metals show up in the soils. So what Independence Gold has done this year, it's drilled 30 RC holes, fairly shallow, 3,000 meters, in the area of the Sunrise and Sunset Boulevards, and you can't tell at all from looking at the little chips whether you're going to have any joy. You can see sulfides, but you don't know if they're going to carry any gold. So we should start getting the results of this over the next 4 to 8 weeks coming in, and what we're hoping to see is that we see bedrock mineralization show up. It has to be better than the 1.5 gram per ton that the Coffee Project has, because in this area there's no oxidation. It is sulfide, so you need a better grade. You're going to need a milling operation. But the scale, the distribution of the gold and soil anomaly is substantial. And what I would expect is this company to, if they do get joy and get a better understanding of the distribution of the gold and bedrock, they will return to this project next year. They will be in a better position because they can start earlier. Because permafrost keeps you from doing soil samples in this terrain until August. They had a late start this year. Next year they should be ready to start as soon as they can go in there.
Isn't the exploration season up north winding down?
It is wound down, and you're starting to see all these companies selling off. But what you watch for now are ones like Independence Gold, which has pulled back. We're still awaiting the results. And we are in a lull. Since mid-August, this rally that started in late January, it stalled in mid-August. Gold's uptrend has stalled. It's about 1305, 1310 right now. The market's still very sensitive to the gold trend. I don't think we're facing a long-term retreat in the price of gold. So for traditional bottom fishers, what we're seeing right now is actually great. The runaway uptrends that we saw in the last 4 months have disappeared. We are seeing stocks retreat. Now you can go in there and rationally look at these companies and do exactly like we're doing now. Look for ones which have drill programs underway where there could come results over the next 3 to 6 months that could turn around the story completely, and be prepared to accumulate them before the end of the year if there is something like a tax loss selling season. And this year, there could be a tax loss selling season because people have finally made some money in the junior sectors and will be looking to sell those where they managed to lose some money.
John, thanks for today's edition of Discovery Watch.
Jim, it was a pleasure.
The next edition of Discovery Watch will be this Thursday. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.